What a great week it was. I know it's not great for every one of you, especially for the one who don't follow the rules. But it's great week for someone who followed the rules, who enter and exit the trades at right timing. And if you have your strategy there, then trust me, we had lots of opportunities this week in the market. That is what I'm going to talk about in the first part of the video. I'm going to show you all the entries I personally took, the losses as well, and the trades I've sent to the members, and how we can enter the trades with the exact rules, what to look at when to enter the trades, and how you can become a profitable trader if you follow simple rules in your trading. So I'll see you guys right after the intro. Right, so in the first part of the video, like I mentioned, I'm going to talk all about the educational contents that will help you to understand trading in more depth, and that will also help you to understand the trading psychology more efficiently. In the second part of the video, we're going to do the analysis for net gas, gold, silver and crude oil. So if you want to skip the first part of the video, you can always skip it to the timeline you can see. But trust me, if you want to watch the first part of the video, you're going to learn tons of things and it will really help you to understand trading in a good manner. So without wasting any time, let's jump on to the trades we took. Now, from the last 2 to 3 weeks, it was not a very good week. It was still profitable week. It was still not a great week. We had winning streaks, we have losing streaks, but if you are under your risk capital, then you can able to take some good trades in the upcoming week. Let's say you have blown up your account in the last week, then you have this week where you've seen lots of opportunity. You won't be able to take the trades because you already blown up your account and you will just cursing yourself that why you didn't follow your risk capital. Now in trading, all you need to do, follow 4 factors. Open your charts on your trading day, observe the market, right? This is what I always talk about in my video. Once you observe the market, look for the conditions. Now, I'm also going to tell you how I personally look for the conditions. If entry is happening, if there's a potential entry that is happening when I'm sleeping, then I set up my alarm at that time to look for my 4-hour candle close, and I'm going to talk about that in a very short moment. So once you observe the market, look for the possible conditions, look for the trend, look for the price. If the price is at the major area of value, look all that. And then once you observe the market, you need to look for the conditions, right? So let's say the price is now at the area of value. You have observed the market, right? Now you're waiting that if you have an engulfing candle, that is your sell condition, right? So you're waiting on that candle. Now, the next thing, you look at the time when this candle is closed. Let's say this candle is closed at 6 a.m. in the morning. Now for me, I'm awake most of the time at 6 a.m. But if not, let's say I'm sleeping, I set up my alarm at 6 a.m. to see if this candle closes as an engulfing candle. I wake up and I place my trade and I go back to sleep, right? So that is how you look for the conditions. Once you look for the conditions, what is the next step? You set up your targets, right? You set up a stop loss, you set up a take profit, and then you take your entry and then leave it to the market. Don't get panic. What happens if the price reverses? Don't get panic. You have a stop loss there. If you do that all the time, then trust me, you will not be able to make money. You will just go in circles and circles and circles, and then you will give up on trading. So that is what you need to do when the trading week starts. And that is what exactly I do. I'm going to tell you all my routine when we have a start of the trading week. So that is what I do. I mark my zones. I send it to members. If you have a members, you get these zones over the weekend, right? Let's look at the entry, how we entered the trade. The first trade we took in the priority group, there was 2 trades I've sent to the members. One is New Zealand dollar with US dollar. I had a winning trade here that I personally took, but we had another low and then we had a pullback followed by bearish engulfing pattern right here. So that was my entry, a little bit above, but unfortunately that was a stop loss hit of 26 pips. That is totally fine. Now if you are under your risk capital, you wouldn't be blowing up your account just on a single trade you see right here. Right, we are out. That was a shitty feeling. That's totally fine. Let's move on. Let's look for the next trade. So this was a trade, the first trade, and along with that, I've sent another trade to the members. That really tested my patience. Right, so that was a trade I've just shown you. NZDUSD, that was a losing trade. And then we had a winner, which is AUDNZD. Now we had this trade set up, and we set up the trade because if you see here, this pair was pushing up in a nice uptrend since here. Now, I wanted to look for my opportunity at this area of value. Now, if there is no opportunity, what are we going to do? we're going to skip it. We're going to move ahead and we're going to look for the next opportunity. If we have no condition, as you can see, the price did not give me a chance to enter my trade. There is no bearish signal, so why the heck we're going to enter the trade without any reason? So moved ahead and I said, let's look for buy condition. There is no buy condition, and then I was waiting for the price to hit this zone, and then what happens? The price pushes up. We had an aggressive entry right here, but I did not take this as an entry. So we had a pullback, then we had formation of a double top pattern. Now the price came back in my area of value. We observe the market, look for this area. We have a condition, we had this double top pattern. Now we have a target set, which is right here. A stop loss was above this pattern. Take profit is right here, 34 pips. So that is how you observe the market. And now that tested my patience. Now I got messages from members that shall we exit the trades, because the trade was at initially pushing up and about to hit stop loss. But that is what you don't need to do. A very good example here, that the price reverses from here, barely hit take profit and then pushes back up, but it did hit your take profit according to your stop loss and take profit set. So price was here, push up. We had a relief right here, and then most of you, I'm sure if you are just starting out in forex, you get feared out, you get scared at this green candle, and you might have exited the trade. You don't need to do it, because if you do it again, you're going to end up taking more losses and getting less reward. So eventually that hit our take profit, and then price pushes back up. That is fine. We had a winner right here. Now let me show you another trade we took in the priority group right here. We had another trade in the priority group, and if you read here, we have a couple of pullback entries in the other forex pairs, and I've mentioned Euro Japanese yen, GBP Japanese yen, and USDCHF. Now I want you guys to look at the pattern right here I've sent to the members. A basic instruction, why I'm entering the trade, what confluence I'm looking at to enter this trade. Now the price was pushing up in a nice uptrend right above 50 EMA. All we are looking at are buy conditions only, and when the price is above the EMAs, we look for the buy condition. And if you see, it is a trending market above 50 EMA and 20 EMA as well. We have a good gap, and then the price is heading towards a level of resistance right here. We are still in between the levels, so all we need to do, enter your buy trade. Still the price hit the counter trading zone. Now we had this bullish engulfing pattern. Now do not just go and start trading this pattern, because I look for very small details to take my entry. Sometimes there might be an invalid pattern if something is not following one of my trading rules. So in general, this is one of my valid pattern right here, a bullish engulfing pattern that happens above 50 EMA. Now the take profit one has been hit. I'm holding on with this trade, and I have the zone right above where I want to exit. And please do not take this trade at this point, because it's already late. If you try to jump on in this trade, then trust me, it will hinder your risk to reward ratio. This is something I do. If you are trading using my analysis, please trade on your own risk. Everything is just for educational purposes. This was just to show you how I manage my trades if I see a condition and if the price is in between the zones. Now I still have a room for the price to hit my zone above. If it hits, I'll exit my trade and I'll see how it goes. I'm managing this trade according to my rules. So that is what we got. And if you see, I mentioned Euro Japanese yen, GBPJPY, USDCHF. I'm also going to show you the other trades with a similar pattern. So remember these three pairs. Let's go back to all three pairs. Now I always say it is not a signal group, and that is why I did not send all these trades, but I want you guys to learn looking at the patterns, looking at the trade ladder I send you, so that you know what I'm looking at to take my trades. So Euro Japanese yen, if you see here, we have a similar pattern I've just shown you, and I've already sent to the members that we have a similar pattern happening in the market, and we have that pattern, and we had a good take profit of 71 pips. If you have entered, then you have made some money here. Now I've also said we are getting a similar pattern here on GBP Japanese yen. Now we had a similar pattern right here. That was a trade I've also mentioned in my live session I've done, if you have seen that, and that also hit a take profit of 78 pips. So you see how nicely the price is pushing up. We are above 50 EMA. We are in an uptrend. Price just made a new high, and then we had a pullback, and we are good engulfing pattern right here. That would be a valid entry as well if you have entered using this one. That is totally fine, but we entered here, and we have another trade which is USDCHF right here. So USDCHF is right here. We have an engulfer. We are above 50 and 20 EMA, and this is a trade that hit my target, barely hit my target, and then pushes lower. The reason I've not managed this trade, because we are due for some big news events for the US dollar. That is why I just want to come out of the US dollar trades, all of them, and one of them hit my stop loss as well, which I'm going to go in a very short moment. So I've mentioned all these trades so that you see the conditions and try to learn and try to look for the patterns, look for the confluences, and take your own trading decisions. decisions rather than just relying on signal services. Pay them so that they send you the signals out of nowhere and you don't know what they are sending you. I want you guys to see and look and understand the patterns so that you understand trading on your own self. Now, a good trade, all three of them hit our take profit. So these are the 4 alerts I've sent to the members. 3 of them hit take profit and 1 of them was a stop loss, and it won't happen all the time because, like I said, it won't be a signal group. Don't take it as a signal group. It might be a losing trade you are receiving because I also take my personal trades to exact same patterns with the other pairs. There might be a winners, but you might be getting a losing trade, and that is why learn from these patterns. Now I want to show you the other trades I've personally taken with the exact same patterns. Right here, USD Japanese yen, the price made a new high. We had a pullback, bullish engulfer, and that hit my stop loss. So that is totally fine. Stop loss of 56 pips has been hit, but I followed my rule. Then that is what we need to follow. Observe the market, look for the condition, and nobody has a magic wand. So all you need an edge over the market by having your strategy there, by having a risk management and having a strong trading psychology that separates you from the losing trader and put you in the list of professional traders. So follow your rules and then you can able to make money as well in the market. So a loser here, but I followed my rules. That is totally fine. Right here, NZDCAD, a good trade right here, which I've managed till this recent level right here, and exit my trade at 81 pips, little bit below this area because I was seeing the rejection here and the price was almost there, and that is why I just want to exit my trade little bit below from this area. But what do you see? Exact similar patterns. We had a good gap between EMAs. We have an uptrend. We have a bullish engulfer happened above 50 EMA, and that is how we entered the trade with conditions. Only all these entries are in the trending market, and that is how right along with the trend. And trend is your friend until it bends. When does it bend? It bends at the area of value. I've just shown you the trade of AUDNZD where it bends and where it reverses from the area of value. So when the market is trending, don't fight with it. Look for the conditions and enter your trades with your conditions. Next one I've took is GBPCAD. Right here, the price was pushing up in a nice uptrend. We had a nice entry condition, which is right here my bullish engulfer, and that is what my entry is. And right here, 59 pips target has been hit. It was about to hit the level of resistance, but my target was also aligning with the level of resistance. That is why I did not manage it. I just want to come out of this trade at my fixed targets. I've not sent this as a trade alert to the members, but I've sent zones to my members to look for a sell trade from the area of value. Now, how nicely the price pushes up, formed a double top and then pushes back down. Now some of the members have already seen my entry because when I sent the screenshot of the zones, I was already in the trade, and right here some of them they messaged me that they have entered the buy trade. So that is fine as long as you have followed all your rules. Now we had a nice buy condition here, and then we had a nice double top here, and then the price pushes lower nicely from this area, 114 pips, and then pushes back up. So how nicely we entered the trade with conditions for the buy and then for the sell, and then price pushes lower. I took this buy trade only. I did not enter my sell trade, but it did push down 100 pips from the zone I've sent to the members. Right here, another trade, a bearish example, and again do not take this trade. I don't know what's going to happen after the weekend. It might reverse and hit my stop loss, trading below 50 EMA nicely, good gap, and then we had a price pullback with bearish engulfer, and I've entered this trade, and let's see how it goes. We never know what happens. No one can predict the market 100%, and let's see how it goes. If it hit my take profit, then it's cool. If not, then I know that I can able to take another opportunity with the same entry patterns. Now I also want to show you one trade here which did not play out from the zone. I've sent these zones to the members that I'll be looking to enter my buy trade from the area of value if we have a pullback to my zone. Right here, I managed to enter my buy trade. I've already shown you some examples how we entered the trade. We have a good momentum over 50 EMA. We had a nice bullish engulfer, and that is enough to hit my take profit. And then the price was pulling back down to the zone from where we were prepared to enter our trade. Now, do you see any sort of conditions here? No, there is no bullish engulfer. There is no buy signal here. We have no entry according to the rules I teach to my members and my students. So if there is no conditions, we are not taking any sort of trades. So a good example of not entering the trade without any conditions, but we were prepared to take our entries from the area of value. Now I want to show you a few indices that played out nicely from the counter trading zone. We were prepared to take our entry, and when we have a conditions, we only take our trades with condition. Then we set up stops and target in case the market pushes against us. Then we have a protection of stop loss there that will prevent in blowing up your account. So right here, indices report sent to the members. Let me show you UK100 first. So the price was in the zone. I've already mentioned that we are inside the area of value, and I'll be looking for the possible buy trades with one of the entry conditions on smaller time frames. So the zone was sent on a daily time frame, and then we got a nice bullish engulfing pattern. Buyers engulfing the sellers means the price is likely gonna push up, and as you can see how nicely the price pushes up from the zone, and that is enough to hit your target. And if you would have entered here, even if you would have gone 1.4 to 1 risk to reward ratio, that would have been hit easily from the area of value, even more than that. If you want to tight your stop loss, keep it below the wick of the pattern right here. So good example of that happens at the area of value, happens with conditions. Now for S&P 500, we were preparing for the price come in the zone and then looking for the entry condition, but it did not even make it to my zones. But we had a good bullish engulfer that pushed the price up, but I did not enter this trade, and we are not going to enter the trade like this. If there is no conditions where we were prepared for, then we are skipping that entry. Doesn't matter if the price pushes up and we miss the chance. That is not how we trade. We trade with conditions and some rules to follow. That is what separates us from the losing trader. And then we have Nasdaq right here. So we were prepared to take our entries. I've already mentioned that we are inside of the area of value in the structure, and then the price pushes up nicely from here, from this area of value. But again, for me, it is not one of the entry conditions. I don't see any sort of entry condition, but still did push up from the area of value which we were prepared to take our entries. Yes, this pin bar can be an entry, but I did not enter this trade because I was looking for some aggressive entry like bullish engulfers or double bottom, which I did not get, but it still pushes up from the zone. The reason I'm showing that, if I see no conditions according to my rules, I stay away from that market. And then we have our favorite one, net gas. I've already mentioned to my members that we are now late for the entries, but because as I was conducting a live session on my YouTube, if you are in the live session, then I've already mentioned this trade in the session that we have a possible buy signal, and that is why I couldn't send this alert to the members in time. But I'm glad that most of you have figured out this entry and most of you have entered this trade, and also some of you have entered right here, and I've already said that please don't enter that. Please don't do this, otherwise it will hinder your risk to reward ratio. But this is how my target would look like if I would have entered this trade. Because I was in a live session, I did not get a chance to take this trade, and I was already in few trades. That is why I was not interested in taking this trade. But we had a condition right here. The targets was set something like this according to Honda. Now if you see here, exact same condition, we are in an uptrend, a nice gap in EMS, bullish engulfer that pushes the price higher. We had an entry here on capital.com as well, a good bullish engulfing pattern that pushed the price up and hit our take profit easily. And that is how we take our trades, with condition, with the rules, with observation, by setting your proper stops and targets. So that's it for the first part of the video. I hope you got a value out of this first educational part. I hope you can learn from this, and I hope you can implement that on your trading. If you are trading using the rules you're learning from somewhere else, or if you are learning from me, if you are in my course, please backtest your strategy first. Do not just start taking the entries, looking at this candle, backtest, optimize your best performing pair, and then put your pairs in your portfolio. If you see that pairs perform well and give you a better winning percentage, then start trading. Do not trade blindly. Get a right education first, learn all the rules, only then invest your hard-earned money in the market. And if you're interested in learning full trading system with exact rules from basics to the advanced level, you will learn all the strategies, how to set up stops and target, how to mark support and resistance, every single thing you will learn in the course. If you are interested, it is a one-time investment on you, and you will not regret it, because then there will be no more guessing games in a market. You will know all the rules of your trading, and you have all the lessons here that will help you to understand trading in more depth right here. And we also have a weekly guide that shows the strategy is working perfectly fine every single day in the current market. I show you how we got an entry and how we were able to pull some profits out of the market, and you learn more strategies. I can't explain every single strategy in a single video. I only teach you few strategies here so that it won't confuse you, so that you won't just start trading every single thing and only get confused. So that is why I have a full trading system. If you're interested, feel free to check that out. Links are in the description. And I have a welcome video here where you have brief information what to expect from the course and about the lessons and everything. If not, that's totally cool. Make sure you hit the like button, subscribe if you're new, so that we can all trade together and trade efficiently. So with that being said, let's start the second part of the video, which is our analysis part. And starting with natural gas, I'm going to go through gold, silver and crude oil. So let's see what I've said in my last video so that you can understand the conditions and entries. Now, what do we have? We are getting another bullish engulfing pattern. Now in this case, the next candle we are getting is a possible bullish engulfer. If it closes as a bullish engulfing candle, in that case I will have a valid pullback entry as price made a new high. Then we had a good pullback followed by a bullish candle. In that case, if that happens, I'm going to take my long trade and I'll take 1 ATR for my initial targets. You can manage it accordingly and you can take your targets according to your own risk appetite. Nice one. How nicely the price pushes up from this candle I've mentioned in my last video and also in my live session if you have seen that. So first we have net gas, and as you can see, the price made a new high. We had a pullback, we had a push up, and now I'm not going to enter my buy trades anymore until when? Until I see a break above this high, this previous candle. If we have a break above with a wick and then we get a good pullback, something like this, I will go for another buy trade. Till when? Till we are completely break and close above. Close is important for the next trend continuation trade. For the pullback trades, I want to see a new high from this high, then with the pullback, take another trade, something like this. Now, I'm also paying attention to this pattern right here. We can also get a double top here, and if we get a double top here followed by red candle, bearish engulfers, inverted hammer, 382 candle, in that case then we can expect a big pullback. It can happen till 50 EMA, it can happen till 20 EMA. That is enough to hit your targets. If you have a condition of sell, I'll sell and wait and see how the price action reacts from 50 and 20 EMA. I'll set my 1 ATR target, manage it and exit accordingly, and I'll see the next condition. If I get a next condition at 50 EMA with bullish engulfer, and take another long trade. So that is how I'm going to do my analysis, and that is how I'm going to take my trades. Once the price completely broke above, let's say we have a dramatic push up, break above and close above this high, in that case I'll still look for the pullback entry and keep on taking long till the price hit the next upper level of this resistance, which is 3.433. We are in a very strong uptrend, net gas in a strong uptrend, and as you can see, we have a double top here, but we are trading above all the EMAs. All we want to see a break above this high to get to the next level of resistance, which is quite high. Once we get to the level, we're going to take another counter trade, might be big pullback once the price get to the zone, and use the zone below as our trend continuation zone to take a buy trades and keep on heading higher and look for the condition for sell and buy both. So look for these conditions. Once we have that, for sell trade, a double top with conditions. For buy trade, once we have a double top with a pullback, then bullish engulfer. Now, just to give you a heads up, I won't be taking any buy trades if we have a condition like a bullish engulfer here. For my next buy trade, I want to see a new high and then a pullback. Or if we have a double top right here after a new high, rejection, the wick can only go above, and then we have a double top, only then I'll start to look for my buy condition. If you're confused, please rewatch it. I'm sure you're going to get the concept of it. So keep an eye here, look for the conditions. For now, wait for the conditions, either double tops or break above this high for the next trading opportunity. Exactly the same here. Move your rejection box, something like this. Here on capital.com, look for the rejection here. If you have a rejection, that's fine. We're going to take sell trade. If you have a new high, we start to look for the pullback till the price hit the next level of resistance, which is the upper level 3.750, from where we're going to start to look for the sell condition like bearish engulfers or double top from the upper level. So these are the conditions I'll be looking at closely to take my buy or sell trades. Here on NEMEX, very important, have the zones like this. So according to the NEMEX platform, we had a push up, pullback and kind of triple top right here. So we can get a pullback to 50 EMA and possible bounce from here. But for the next buy trade, I want to see a good break above this high with the pullback and keep on taking long straight. For now, I can see a triple top and we can expect some pullback to 50 EMA and then a possible bounce from this platform. Otherwise, everything is same, not taking any trades for gas until I see a good condition for entries. Next one, we have gold. Right here on gold, I'm still waiting for the price to break out above. We are still consolidating and with the price is still ranging in this area right here. Like I said, we can get some bounce. We are getting a bounce. We can get a hit of this area and then we can get another push down here. And we might go in consolidation for a while. Now, I will only look for my next buy opportunity till we are completely broken above. Then with a pullback, followed by bullish engulfer. In general, we are in a nice uptrend. Once we are broken above, we can likely hit the level of major resistance, which is 2035.12 goes up to 2052.72, from where I'll be looking to enter my sell trade with bearish engulfers and my double top entry conditions. Once the price hit the zone, only then I start to look for my sell trades, not taking any sell trades till we are above all the EMAs, till the price hit the zone, or if you have a dramatic fall below 50 EMA, only then I'll start to look for my sell condition. For now, I'm just waiting for the breakout of this pattern to take my next buy trade. Exactly the same for silver. Silver has formed a bullish candle right here. Looks like we have a good bullish pressure, not taking any trades for silver as well till we are completely broken above this consolidation. Once the price break above this previous high and possibly this consolidation as well with the flag pattern which the price is forming. We are still ranging within this area, and we can see this range for a while now. Once we have completely broken above, then the price can likely hit the level above, which is 24.26, goes up to 24.70, from where we're going to enter our sell trade with bearish engulfers or double top entry conditions. So keep an eye here, look for the breakout, and once we have a condition for buy and sell, enter your trades accordingly. Sell only once the price completely broken below 50 EMA and this box as well. Last one we have crude oil. Crude oil is now broken below, as I mentioned that 50 EMA is an area that I'll be closely looking at, and we had a rejection from 50 EMA downtrend. Looks like the price is now heading lower. Now we are still within this rejection box right here, and only one candle has closed below right here. All I want to see another candle close below. Once we have another candle close below, a good bearish momentum, in that case we will become totally bearish, and all I want to see, use my Fibonacci to, let's say we have a candle close like this, I calculate my pullback, I use 50% retracement for my sell limit order and take my sell trade, use 1.618 retracement for my second target. First target will be 1 ATR, which is $1 if we have conditions. So these are the conditions I'll be looking at. Once we are completely broken below, for less aggressive traders, look for the pullback followed by bearish engulf and keep on taking short, or use the green zone right here, 82.11 goes up to 84.05 as your trend continuation zone bearish. Once the price hit the zone, bearish engulfer will be your entry condition if you are less aggressive trader. Aggressive entries with the Fibonacci tool I've just mentioned. I'm going to change the color to red because now it will likely turn a level of resistance. So before I end this video, I just want to mention that if you want to join priority group for free, you don't have to pay anything. All you need to do, just join one of my partner broker, and if you join them, the links are in the description of any of my video. If you just scroll down here, if you see right here the INFX, there's no commission account. Right here we have a different type of accounts, raw spread account if you are a scalper, and then we have a very good account which is a pro account, and minimum deposit requirement is 2k for this one. Otherwise this is 1k requirement for these accounts. We have IC market as well, switch market, minimum deposit requirement is 1k for them, and once you join them, you're going to receive these area of value every week for all the commodities, major commodities like silver, aluminium, we have copper, we have sugar, we have wheat, we have palladium, we have platinum, we have coffee, and then we have corn. All the commodities you see here, if I see a good setups of that, then I send these zones to my members, and along with that you get indices reports as well. All these indices which I'm personally looking for a good setup for the following week, and with that you also get a forex reports every week for 4 to 7 pairs, get some demand and supply zones. So once you join that, you get all these, and you also get trade alerts 1 to 4 times a week showing you the trades, the exact way of entering, the way I personally enter my trade, so that you can know how we enter the trade without any guesses. And with that, you can also DM me anytime if you have any trading related questions. I will answer your DMs on priority basis. And if you're trading any other indices, any other instrument, you can always check that charts with me, or any confusion, trading related confusion. So all that links in the description. All you need to do, you can email me at support@moneymarkets.net. So that's it I want to mention before I end this video. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.